The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 30 minutes to go until the start of trading in markets. We're picking up right where we left off yesterday, man. We are 1 points basically above where we were trading at yesterday at 8:30 in the morning. We're trading at 42.40. We came into the CPI at 41.40. Pretty elevated territory already. We blow through 4,200 last night. We're 31 points higher right now. That's another 0.75% to kick things off. NASDAQ 100, you're positive by about 100 points. We're basically trading at 13,500. You're positive by the similar 0.75%. Dow right there as well, 0.75% higher. We got PPI numbers tonight. Again, soft inflation numbers, what the market probably likes to see. We're higher on those numbers. The Russell up about 0.8%. We almost hit 2,000 in the Russell. We're at 1985. That's positive by 16 points. Bitcoin catches a bid. Crypto's catching a bid. Bitcoin up 5.2% right now. Ethereum up 5.6% right now. Ethereum's nearing 2,000 again. Bitcoin right at about 25,000. You got crude catching a bid. Not out of the woods just yet. Crude in the last 24 hours is up $5.50. We spiked to $88 yesterday. We're at $93.48 right now. Gold, remarkable action yesterday on the CPI data. My dad talking about gold last night on the program. You'd expect, right, when you get dollar action like you got weak dollar, gold spikes, gold actually gives it back. We're sitting right now kind of right where you came into that CPI number at 1811, and we jumped to notes and bonds. And you have a little bit of higher price. Talk about a recoil yesterday as well. You have the 10-year right now positive by 9 ticks. You're talking about a yield on the 10-year of about 2.76%. 2.76%, the yield on that 10-year. And let's jump over to the VIX as this market marches higher. Joking with friends this morning, I said, this is probably the sell. There's too much news, good news. I said, there's too much good news priced in. Things are very optimistic right now, rightfully so, with some of the data that we're getting. The Fed said it was all about the data, and what's happening? The data we're getting is pretty good. It's definitely not pretty bad in terms of where we were for expectations. The headline yearly numbers are still pretty staggering, but you already know 11 of the 12 months coming into the number, folks. We'll talk to our man Kevin Hincks after the first break in about 5-6 minutes. When we do, he was always saying that. It's a great point. You know, the headline number, especially right now, made for headlines, man, the headline number. But if you want to get ahead of the action, a month-over-month number, a lot more informative. The thing is, those month-over-month numbers can have more variance, obviously, right? So you got to catch the trend. We got a 0% print on a monthly basis on the CPI yesterday, but that includes shelter up 0.5%. I got articles up this morning that we're talking about record rental prices in Manhattan. I'm sure that's probably across the board, man. You're probably dealing with almost record rental prices in the Tampa market, St. Pete, Clearwater market in Florida. Pretty sure, you know, and again, you're going to get a little bit of variance on a monthly basis, but we'll pull up that article. Shelter, one third of the CPI component, and you have rents up 0.5% on the month yesterday. You have food prices up 1.1% on a monthly basis yesterday. But let's get into the PPI numbers, because some pretty optimistic numbers in terms of if you're looking for data that's going to point to inflation possibly peaking, this would be a nice one. PPI prices fall for the first time since early in the pandemic. They fell 0.5% in July from a month earlier. A drop in energy prices and services moderate. When you take a look at it, now here's the kicker, right? Producer price index for final demand decreased 0.5% from a month earlier. And if you want to talk about the headline yearly number, like I just said, rose 9.8% from a year ago. But guess what? We already knew that was going to happen, folks. Okay? The core number rose 0.2% from June, 7.6% from a year earlier. Now, what was the expectations? Because it was not, they were looking for a gain of 0.2%. And the number comes in at a decline of 0.5%. Okay? That's a big one, folks, on a big way. Most of the decline came from energy, which declined 9%. That contributed to a 1.8% drop in prices, while the index for services rose 1%. A little bit of a divergence. Same thing with CPI yesterday, right? Month over month, you have to like those numbers, okay? But, and I'm just looking, so these are July numbers, okay? Now, to show you again what the crude contract was doing, let's put it back on a daily, because, man, these inflationary numbers, okay, and it matters because energy prices are a big component of what people are paying for right now, okay, so they matter. But, I mean, in July, we kicked off July at almost 110, okay, and yeah, we had lower lows and lower highs. You did catch some pops throughout the month, okay, but this is the daily for the month of July. We kick it off with an opening at technically 106. You reach 109.34. You reach 111 on July 5th, okay? And we finish the month by chopping around at about 97.50 for a lot of it, okay? Lower prices throughout the month, especially when compared to June. Look at June, 120, right? We come into June at 114, okay? So, point being, unless we somehow figure out how the price of crude is going to drop $20 a barrel month over month to offset, I might sneeze. Excuse me, folks. Unless we think that crude's going to be able to drop $20 a barrel, and I'm exaggerating a bit, but you got to understand the context of how much these numbers were helped out by energy, and we're now sitting at a level where we have crude sitting with an 80 handle, okay? Yeah, 89. Now we're at 93.50. Crude was just at $88 yesterday, though, okay? We had a great conversation with our man, Teddy Kegstad. The influences from energy and gas prices are going to not be as helpful in the future months, and if rental prices are still soaring, if food is still going up 1.1% month over month, if, shelter's going up 0.5%, et cetera, it's going to be important. We got a Fed meeting in September, and we're going to get one more print for August. And I don't imagine that the comps are going to be as helpful with the energy prices as they have been for these numbers right here. You're seeing it in the CPI again as well. You strip out the food and energy, as we said, core increased 0.2%, but the market was expecting a 0.4% gain. So even taking out food and energy, the CPI, 0.2% below what it was looking for on that number. So decent numbers to start things off for the CPI. In following the CPI, and the market seems to love it, man. But I'm laying out the case for a lot of volatility coming down the line. Now, here's your S&P, man. You got to love channel lines, right? Now, whether you call it a triangle, a pennant, whatever you want to call it, when you break out of that trend, man, that was quite an opportunity at 3,900. You trade up to 4,240. I mean, folks, it doesn't mean the market has to crash. But this run from 36.39, just for some context here, even a healthy retracement of this run, okay? You're talking about maybe the S&P trading down to 4,000. Nice even mark. Maybe it trades back down to the highs we had from July 22nd. I find it very difficult for this thing to trade up to 4,500 with the looming prospect that energy prices have brought down some of these inflationary tendencies. We're going to take a look at an article later as well, talking about some of the Fed governors, okay? And guess what? Maybe this is the headline. Yeah, this is the one, man. My dad was talking about this as well. Some of the Fed governors are out there saying, it's good data, but it doesn't sway us at all. We're hiking, and we're hiking it to next year. Now, there's some of the hawks out there. Stay tuned, folks. We'll be back with our man Kevin Hincks in 3 minutes.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We get the S&P's up 30 points right now. You get the NASDAQ 100 up 94, the Dow up 250. We get some good PPI data out there. We get some earnings kicking things into gear as well. Let's jump over to our man Kevin Hincks. Every trading day, folks, 12 noon Eastern time, fast market on the TD Ameritrade Network right here on Tiger TV. Kevin Hincks, Tom White, the team at TD Ameritrade Network, they break down the day's market action. They got great segments, folks. They're usually going over 3 different equities, setting up hypothetical trades, all of them using options, talking about defined risk every single trade they set up. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Yep, the second leg in the inflation data for this week gets us that negative number that we're looking for, Tommy. Negative 0.5% in terms of month-over-month PPI data. That's a pretty good number, Tommy. And if you look at the year-over-year, 9.8%, that's a 1.5 lower than a month ago, Tommy. And if you break down the tables, it's real simple. Energy materials in July down 21.2%. Energy goods down 9%. Even some of the foodstuffs and feedstuffs down 0.8. Food and feeds down 0.1. So across the board, Tommy, prices at the producer level coming down, maybe even at a faster pace than CPI. But the good news is for consumers is that number usually flows into the CPI down the road. So not only did we get good news yesterday from CPI, but more good news today from PPI as well, Tommy. Futures like it. They're up about 0.7%. So another good start to the day.
Yeah, pretty remarkable. We are actually back to the flash low we got on January 24th. I think we actually even hit that level yesterday, but we're coming into that level. Some great points about the PPI. So that would be obviously on the producer level, something that could lead into the consumer level. And we kind of get like a 1, 2, 3 trifecta, Kevin, from the jobs number to the CPI to the PPI. Probably couldn't have gone any better. Of course, there's like the elements of rent still rising, food still rising, but you really got to be picking and choosing if you have a big problem with any of the numbers coming out in those three. You've walked our listeners through it before, but just because the data is so important right now, and those are, I think, some of the biggest numbers you mentioned, but on a monthly and quarterly even basis, what are the biggest data points that you like to watch, Kevin? Because I know we're coming out of three of them for the listeners out there that haven't heard you talk about that before.
Sure, Tommy. What I like to do, there's data that's, top tier, second tier, third tier, and there's about 6 of them that I really watch that are really market movers. And that is, number one, the number one data point of the month. It always was, and it always will be jobless claims, unemployment rate, right? The amount of data you get in that release is pretty important. Number 2, yesterday's number, CPI. The consumer price index is vitally important. PPI goes along with that, but also personal income and outlays, another good look at inflation. So in those first 4 that I just mentioned, those are also the 4 looks at inflation during a month. You throw in durable goods, you throw in retail sales, and you've got a really good look at the overall economy. Those are the top 5, if you combine together, top 6 data points that I like to look at in a month. That's the highest tier. There's several that are important below that, like the number we'll get tomorrow, consumer sentiment. Those are those forward-looking numbers, Tommy. So there's a lot of data coming out during the month, a lot of data that is more important than others, but we pay attention to all of it here, Tommy. Just some of it, it's only important if it jumps out of where the expectations are. But jobless claims is one we get weekly, so that's interesting, but it's the non-farm payroll and the unemployment data, Tommy. That's the number one data point of the month that we look at.
I appreciate the breakdown, man. I think it's great information. I remember the first time I heard you walking through that, I think in an interview with my dad. I was writing it down, man, because especially it used to be important, and it was always important, like you say, but right now, man, it feels like it is so important when the Fed literally says we're in a hiking cycle. We've just hiked 75 basis points for a couple meetings, and we're going to watch the data to figure out what we do. You better know what data they're talking about, folks, and what matters. So I appreciate that. I'm sure the listeners do as well, Kevin. We're coming out of some earnings. Disney, some decent numbers last night. What are you guys talking about on the program coming up at 12 today?
Good ones today, Tommy. First, we're going to look at Apple in the first segment. We'll go through everything. High-profile names like Apple and Microsoft and Meta and all these names, we cover them often. Why? Because they're actively traded and they're highly held by customers. So we always want to cover the high-profile names. We'll take another look at Apple today. Then we'll look at Rivian. Like Foley will do a presentation on the EV car maker. Remember, you've got EV credits. The most important thing about 25,000 cars, can they get to that number or surpass it? So we'll look at Rivian today. And then First Solar. With everything going on with the passage of the bill that's probably going to happen today, we'll get solar companies and see if they're worth getting involved in or how you might trade them, Tommy.
Yeah, and look at that jump on First Solar, man. Maybe you missed the boat. We'll find out. I'm going to be tuning in from, $60 last month. They had some decent earnings, it looks like, and probably accelerated on the news of that passage as well. And Apple, Kevin, quite the run this has had, man. We are up more than, what is this? Yeah, almost $40, more than $40, $41 basically. 16 billion shares outstanding, folks. Apple alone, since the lows that we had on June 15th, $640 billion in market cap added. Basically, as you're coming into almost recent highs in Apple at about the 180 range, you're sitting right now at about 170. Well, Kevin, we appreciate the time as always, man. We appreciate the breakdown, the education, and the program at 12. We'll be watching at 12 today, man. You have a great one. You have a great weekend as well.
Thanks for having me on, Tommy. Have a great weekend.
Always a pleasure. Folks, tune in. They're going to be talking about 3 great stocks. Everybody basically owns Apple, man, when you're talking about a company. And what are we approaching, man? We're probably approaching $3 trillion again. Haven't watched it for a while. Well, we're still at 2.7, okay? But, boy, you're talking about we're approaching 2, folks. We've just added $640 billion in market cap to a company in the span of about 6 weeks. If you don't think pullbacks are possible, think about that type of wealth creation. But guess what? We lost it, okay, in the span of 2.5 months. you took down about 800 billion. Yeah, Apple lost 800 billion in market cap from April 1st to the middle of June. What is that? April, May, June. Yeah, 10 weeks. They lost 800 billion. We didn't have a $1 trillion company, I think, until 2018 or 19, when all the big FANG stocks were racing to become the first $1 trillion company. I think 2018 or 19, maybe somebody knows in the den. But nonetheless, we didn't even have a company that was worth $1 trillion until 2 or 3 years ago. And Apple just lost $800 billion in the span of 2.5 months and then gained $650 billion in the span of 6 weeks. That's some volatility for you, folks. And keep your eye on some of those data points that Kevin was talking about as we march towards next month. We're coming out of 3 big data points. We're going to have to wait another month to get those 3. The Fed's going to hear those next 3, though, before their September meeting. And I wonder what's going to happen when you're not going to have as much helpful influence from the energy prices in some of those numbers. What's going to happen to food? What's going to happen to shelter? I'll talk about Manhattan rental prices when we get back as well. Stay tuned, folks. We got the S&P's up 29, NASDAQ up 93, NASDAQ 100, that is. Give us a call, 877-927-6648. Stay tuned, folks. We'll be right back for the open.
Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&P is up 30 points right now. You have the NASDAQ 100 up 96, the Dow up 248. All the markets open in positive territory. Checking in on commodities. Crude up $1.42. That's about 1.5%, trading at 93.38. Great discussion with our man Teddy Kegstad yesterday. If you haven't checked out the Tiger Forex report, folks, check it out on the front page of TFNN.com. Every newsletter we do comes with a 30-day money-back guarantee. You can check out my newsletter, Rocket Equities and Options, under the newsletter tab as well. Gold contract down about $5 at 18.08. And let's jump to a little Disney. So Disney earnings last night, strong numbers, man. You're up 8.7%. I have some of this action on the chart in terms of talking about lower volume numbers here. Now, I think those numbers match up from a weekly, do they? Yeah, I think I was notating that on a weekly, and look at how we charge out of that bottom, man. You trade right into the COVID lows, though. Remarkable in terms of trading into that number. We look at it, 113 million, right? The week of May 9th, 62 million the week of May 16th. Let me back this up so you can see the comparison here. Coming into 146 million shares when we broke out about the $100 range. Now, these are weeklies. You spent about 4 to 5 weeks under that price level before you charged out of that. Oops, backing out so you can see the area here. 113 million shares the week we come down May 9th. You come down to that same area on May 16th with 62 million shares. What do? You break below that area the week of June 13th on 70. You come down again on 51. And on the week of July 11th, 54 million. And what are we doing? We're doing big volume. It's Thursday. We got 52 million right now, coming into probably a pretty big day for Disney as you're up 8.3%. And we come into their numbers. Where am I? There we are. You think inflation's coming, folks? It's coming to Disney Plus. 38% is what they'll be jacking up the prices for Disney Plus. They added 14.4 million new subscribers to Disney Plus. They're also going to start ad-supported December 8th, I believe it is, for Disney. Big numbers for the parks as well. They did lower the 2024 Disney Plus subscriber target. Now, what's interesting here, I was listening to some great analysis on Bloomberg late last night. A lot of these numbers have to do with India's Hotstar. Some of those customers are paying like 67 cents a month in India. So obviously the average revenue per user, always a big component, right? The quality of the customers that they're coming online. When you're talking about 14.4 million new subscribers, the market was only looking for 9.8 though, folks. And they knew, that the numbers out of Disney Hotstar, out of Hotstar in India would be big. Okay, so they blew it away in a big way. The company is offering an ad-supported version, okay? $7.99 is going to be the deal with ads. I guess it's not even free, right? Ad-supported, cheaper version. Remarkable. They're going to charge $8 with ads. What did they launch with? Didn't they launch $5.99? $5.99 they launched with no ads. Now they're going $7.99 with ads. Maybe it's $6.99. I pay for the bundle. $2 for ad free. It's interesting to see how this is going to play out, man. But the market likes it, and Disney, ABC, I'm sure they're going to be able to sell plenty of ads in there. Sales jumping 26%. Nonetheless, big numbers across the board for Disney as they continue to jack up their subscriber base. They beat there, and Disney opens up about 7.7%. We got the markets holding up relatively well right now. All right, jumping around to some of the other articles I want to talk about. I talked about, not that one. Where are we? Inflation, Fed's governor. Here we go. Kashkari. So, keep this in mind as you're talking about all this rosy data. And listen, it's important, okay? It's breathe a sigh of relief that energy prices subsiding. We just got a CPI print month over month that was 0%, okay? We just got a PPI print that was down 0.5% month over month. Month over month is what you want to pay attention to, folks. It's the most recent data. I was actually saying to a friend today, if they gave you daily data, I would want it, right? Now, you'd have to really smooth out the variance somehow, but you almost have enough inputs going into prices that maybe you could have a daily number electronically for inflation. And if they had it, I would want it. Okay, it's going to be more volatile. That's the deal. All right, but more present data is what you want to look at. Kevin was talking about consumer sentiment. That gets forward-looking. Okay, all the numbers we're getting when CPI and PPI is backward-looking data. Okay, but keep in mind that it hasn't moved the needle yet. And you have Fed governors already coming out and saying, literally, I haven't seen anything that changes what I want to do with rates when it comes to hiking. mean, ordinarily that would blow up the market, folks, and the market just marches on. I haven't seen anything that changes that. Kashkari said, responding to a question about the CPI number from yesterday. You have Charles Evans, welcome the news at a separate event Wednesday, but added that inflation remains unacceptably high. There will be increasing rates the rest of this year and into next year. Yeah. Now, Kashkari, he's going to be a voter next year. Okay? Evans is set to retire, but pay attention to the voters especially. You have Kashkari, a voting governor next year, saying the CPI print that everyone's championing doesn't change how fast I want to hike rates. That's pretty important, in my opinion, in terms of what's going on. All right, what else do we got going on? Let's jump to crude. Okay, so you have crude trading higher. We have the IEA, boosting the demand outlook. So they're saying that the IEA has consumption estimates that are 380,000 barrels a day as their boost. Yes, they lifted its consumption estimate by 380 barrels a day. Why did they do it? Commodities are amazing, right? Natural gas prices and heat waves are prompting industry and power generators to switch their fuel to oil. What do they say? The best cure for higher prices. Well, what's going to happen? You got higher prices in natural gas. What's everyone going to do? They're going to figure out a way not to use natural gas. Maybe they're going to use oil instead. And then you have that lifting the price of crude, even though crude's already starting at $88. Pretty remarkable. Natural gas is so high that they're saying, you know what? We're going to go to the oil market at $90 a barrel. But that's what they're doing. And they have to raise the consumption estimate by almost 400,000 barrels a day. And, I talked about it, folks, the energy decline. Look at where June, just every chart, it jumps out at me for a second, okay? The energy component from July to June that we just got on the CPI to PPI, that is going to be so hard to replicate, okay? Look at where energy prices were in June for even crude, oil, I should say, and look at where they were in July. That is not something that the market can replicate. Over basically the middle of June, you were trading at about 120 to 115, and you dropped $20 by July. I literally said to a friend, unless we have a plan for the price of a barrel of crude to drop $20 every single month to offset prices going up elsewhere, I'm not sure how inflation gets tamed. A little bit of tongue-in-cheek, folks, but you get the point, and be aware of that and watch those prices, because if we ever get a lift and you have energy prices rising again, maybe it goes into August or September, and you actually have energy prices lifting those CPI prints yet again on a month-to-month basis. Meanwhile, you might still have shelter or food rising. Watch out for that one in a big way, folks. Manhattan, we'll jump to real estate since we're talking about prices. You want to talk about a record. New leases, 4150, up 2.5% from June, 29% from a year earlier. And that number, is about 100 to 150 up. I think last month it was 4,050 maybe? Yeah. I think last month it was, so you're talking about a $100 increase, right? There's going to be some variance here, but nonetheless, still records. And look at that. What a buying opportunity during a crisis, man. Rental prices, record highs. Disney up 9.4% right now. S&P's up 0.6%. Stay tuned, folks. We'll be right back in 3 minutes.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Weekly S&P holding up relatively well. 12 minutes in the trading day. We're right now up about 30 points. That's 0.7%. NASDAQ 100, you're up a pretty similar 0.8% right now, sitting right at 13,500. The Dow up 224. Let's check in on some of the FANG stocks right now. You got Amazon up 0.7% right now. Quite a run Amazon had yesterday, man, on some of the CPI data. All the markets really accelerating higher in a big way. Check out Microsoft right now. Gives back some of the gains it had overnight. You're still positive by 0.1%. Apple shares up another 0.6% above 180. Above 169. You're up at 170.30 right now for Apple. Let's jump over to Tesla. Down about 1/10% for Tesla. We jumped to Twitter shares up about 1/10%. All right, jumping around to what else we have pulled up. Speaking of inflation, the price of the U.S. Postal Service. They're going to be hiking prices for the holiday season. The adjustment is similar to past years. It's going to go into effect between October 2nd and January 22nd. The price increase depends on the weight of the package and the distance of the delivery. Commercial priority is going to see a 75-cent hike, and long-distance deliveries could see an increase up to $6.50. U.S. Postal Service, man, they're dealing with it like everybody. It's got to be so tough competing when you're competing with companies like Amazon, man, in terms of deliveries. All right, what else we got pulled up here? Let's see what we got to talk about. It seems like I have plenty to talk about on this morning. Oh, well, let's talk about gold. JP Morgan. Yeah, their traders found guilty after a long spoofing trial. The jury finds Nowak and Smith used bogus orders to manipulate prices. They're kind of playing like innocent, as if they had no idea that this was allowed. I mean, as somebody that's been registered representative, folks, a Series 7, the one that you are not allowed to manipulate markets, period. It's kind of like when the SEC says fraud is fraud, we can come after cryptocurrency. Manipulating markets is manipulating markets. You can argue that you're oblivious to that or not, but when you're in that level of trading, understanding that spoofing orders to manipulate the price of a market to give yourself a better execution is just about as fundamental basic of the concept of manipulating markets as it gets. So the 3-week trial, detailed trading records, chat logs, testimony. It seemed pretty obvious, which is why they were probably claiming that they were basically oblivious. The case was the biggest yet in the crackdown of the Justice Department. So, they agreed, JP Morgan, to pay a couple years ago almost $1 billion to settle the spoofing allegations against it. So you want to talk about, are they incentivized to break the rules, folks? $1 billion, almost just the cost of doing business, right? $1 billion fine. You got a couple of people that are actually going to jail for that potentially. I'm not sure what the punishment's going to be. Well, it seems like that might be something to go to jail. Probably should be if you're talking about $1 billion here or there. And with that, we jump over to gold itself. Steadies with traders digesting cooling inflation. Interesting, the good price action that you do get on the gold contract. You have PPI falling. You have CPI falling. You have the dollar falling. And nonetheless, gold really hasn't caught a bid in a big way. Despite the improvement, inflation is still well above the Fed's target level, and one reading may be not enough to change their tightening stance. That's one analyst. Be careful out here, folks, because, man, we're sitting at some pretty lofty levels with a lot of volatility to come down the line, okay? The next month's numbers are going to be very important depending on how crude behaves and energy markets behave. And I say that in the context that the price of a barrel of crude is up $5 in almost the last 24 hours. You take a look at the daily, you almost come into the end of July at like the best possible scenario, as in $90. We finished the month of July off at basically lows that we hadn't seen in 6 or 7 months. To do that again, very difficult. I was talking to our man Kevin Hincks yesterday, and I was mentioning, crude for the better part of late October, early November, late last year, was trading at about $85. Yesterday, we were about 88 when we were having that conversation. I was saying, does crude really belong below the price level that we were dealing at when we were in October of that level? We have the IEA raising consumption levels this morning. We still have some tight nines in terms of OPEC, what they're producing. They don't want to raise that production too much. Why would they? They got $90 crude easy for a long time. Why allow that market to trade lower when you can just keep pushing out your crude at $90 a barrel? It's going to run out eventually, man. OPEC, Saudi Arabia, they got generational plans over there. There's no reason to release those coffers, even if it's going to take them 20, 50, 100 years. They are building for 20, 50, 100 years over there. They don't care. There's no reason to tank the price of oil if things are marching along at $90. With that said, where do we go next month for the price? It's pretty staggering. But guess what? The market, we got a reprieve for at least a solid month right now with the S&P's up 31, 42.41. Couldn't believe, actually, when I ran the numbers that you made it back to January 24th. Okay? And you want to talk about something even more interesting? We've basically gotten it all back to October 1st. Okay? So we are back within 60 points, folks. We're within 1.5%. Let's see what the technical low is I have on the ES chart. Yeah, we're within 18 points, 17.5 to be exact, of trading at October 1st prices. Now, it was a heck of a fourth quarter, okay? Obviously not really warranted with how we got a pullback by January 24th of that entire quarter of run. But nonetheless, all we've given back is 1 quarter of the final run of basically a 13-year bull run, man. So we go from 2009, March of 2009. Yeah, you have COVID in there, which is quite a pullback. Okay, and even this pullback here was quite a pullback when you traded in late 2018 from about 3,000 coming into Christmas Eve at about 2,300, right? That was quite a pullback. Doesn't even show up on this chart. It's so big. The point being, this is basically a bull year run from 2009 to the highs, and all we did, folks, is we've given back the final 3 months of the run. It's not usually how bear markets end up. Everything is different. This is a different scenario as well. This is not a 2008 scenario where there's systematic, almost fraud built into every financial institution as they're pumping out mortgage-backed securities. Okay, this is not the internet bubble when you had companies with no revenue making multiples that were just based off fantastical evaluations. I mean, do you remember when Ash Jeeves, I was just like, I think I was still in high school maybe, or even college potentially. I was working at my dad's brokerage. Ash Jeeves, I think their symbol was ASK, whatever it was. I mean, that company went public, and I forget what it just blew up. Every single company, man. All you had to do was go public as a .com with an idea, and your IPO just blew up in a big way to the upside before selling lower. But literally all they did was they probably coded some type of internet search to pretend like you were asking a butler, and boom, an internet company was born. It kind of surmised everything going on there. So yes, it is different, but guess what? It's also different in that we just came off a 100-year pandemic, right? I mean, maybe the last one was the 1918, so you're literally talking about an event that happens every 100 years. You could argue this could be worse. Well, we pulled ourselves out of it, thankfully. Part of the reason we did pull ourselves out of it, folks, was some of that stimulus that I know is driving us all crazy right now, okay? But that did help this market rebound in a big way. And we are sitting about 1,000 S&P points above where we're at. And as long as we get the trend to continue, that CPI does come down, probably a lot better off a year or two into this thing than we would have if you had no assistance in the world shutting down and businesses just going BK without money, people having any money at all. Things are pretty dire, man, if you remember in March of 2000. But nonetheless, all we've given back is 3/4 of that move. Now, listen, I'm not arguing for dire straits, but all I'm saying is maybe we get a little chop around 3,800 to 4,200, maybe just 4,000 to 4,200, waiting for that next data point where we don't get so much help from crude. Stay tuned, folks. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets up all across the board. I bring up Boeing, taking a look. Boeing up another 0.5% right now. Now, this thing has just accelerated over the last 6 weeks. Since you had basically the market lows, you were sitting at 113. You're coming in at 170. This thing's back within the channel line. Now, this is a downtrend channel that you're in. You broke into it with quite a gap on their earnings a couple weeks ago. Boeing up again. It's almost everything, folks. I was just jumping through at the break. I mean, you get airlines up. You got banks up in a big way. We jump over to Delta, up 1.7% right now. You jump over to United, up 2.2% right now. Let's check out domestic. Southwest up 1.1. JetBlue is like their own animal right now. JetBlue even catches a bit, up 2.1. We jump over the cruise ships, up 4.3. They're going to be the most volatile Norwegian up 3.7, and yeah, I mentioned the banks up today, up 1.9 for J.P. Morgan, Bank of America up 2.2%, Wells Fargo up 2.6. It's a broad rally in a big way. We jump over to the FANG stocks. Amazon up another 0.5%. Amazon actually gives it up back a little bit, but boy, we were just trading at 138 early yesterday. You're trading at 143 right now for Amazon shares. Apple, the big dog. They're going to be talking about Apple coming up on Fast Market at 12 Eastern time. Apple's up 0.6%. Microsoft right now flat, gives it back a little bit on the open. Interesting, we start off the week with a NVIDIA revision in a bad deal. Microsoft, they're going to be watched because they have a big gaming sector as well, but nonetheless, you charge higher. And NVIDIA, I mean, look at this. NVIDIA starts off the week at 190. You trade down to 167, and we're up 1.8% today for NVIDIA as this market can't hold it down in a big way, folks. Let's check in on Disney on their earnings. Gives it back a little bit, but you're still up $9, up 8.1%. I was looking at some of the pricing in Disney, and it is interesting. They're actually they're going to allow you to grandfather in. That's not what Netflix is doing, right? Netflix, they just raise it. They have a steady rate for existing customers only. Because I was curious, as I said, I get the bundle. They're jacking the price up $1 only from $13.99 to $14.99. But if you want to come into that bundle right now, you're paying 33% more than I am because Disney's rewarding me as a long-term Disney Plus bundle subscriber. Here's the kicker, folks. They probably know people don't use the bundle. I'm close to canceling the bundle. This is a little bearish. I am. We don't use Hulu, and I don't use ESPN. We have Spectrum, so we use ESPN there. I bet that's the reason, man. People probably close to canceling that bundle. They probably signed up. They only use Disney. But Disney, big numbers today. Stay tuned, folks. Basil Chapman, our man, up next. Live programming all day. Have a great Thursday.